there, Melissa with Peridot Consulting. We get the question a lot, how long to keep your records? So for tax purposes, you want to keep them 3 years from the date you file your taxes, or 2 years from the date you pay your taxes, whichever is later. If your income, your gross income on that tax return is underreported by more than 25%, the IRS can actually go back 6 years. So if there is any question, make sure you keep them for 6 instead of the general 3. Now, if your tax return includes losses from worthless stock or bad debts, then you want to keep them for 7 years. Now, if you don't file your tax return at all, or it's a fraudulent tax return, then you'll need to keep those records indefinitely. When it comes to employment taxes, you'll need to keep the records for those 4 years from the date the taxes are paid. Not the filing date, not the due date, it's when you pay the taxes, 4 years. Now, when it comes to property, real estate, whether it's commercial or personal, like your primary residence or investment property, you want to keep your records, for example, closing statements, receipts of improvements that you've made throughout the years. Those records need to be kept for the entire life that you own the property. And then you can dispose of them 3 years from the date that you sell or dispose of that property. Now, when it comes to if that property is involved in a like-kind exchange, for example, you'll need to keep a copy of the records for your old property as well as the new one. And then again, for those, it's 3 years from the date you dispose or sell of that new property. Now, there may be other reasons why you'd want to keep your records longer. Insurance companies, creditors might have other rules and requirements. So encourage you to check in with them. And if there's any question, the IRS is a great resource, and you can always ask your tax professional how long to keep your records for your own specific situation. That's it.